This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Thanks for being with us here on Business Now. Well, this week the Reserve Bank is fully expected by markets and economists to cut rates by 1/4%. Look more closely at the markets and they fully price in another rate cut in August and a third in December. Well, that's if everything goes to plan. Last week, the headlines for dwelling approvals suggested a big fall in that month. But in the first 3 months of this year, approvals, when you really look closely, are up nearly 20% on the same period last year. That's by more than 8,300 new homes. And this is a clear spark for the fresh development of new homes that the government is so keen to stimulate. Angus Moore is Senior Economist with REA Group and joins me now. Angus, always good to chat to you. I mean, there's the issue, isn't it? If there's a profit incentive and these interest rates coming, there is likely to be more of a profit motive for the private sector to start developing new homes.
Yeah, that's right, Russ. And one of the things we know about residential construction and the new homes market is it is one of the most interest-sensitive parts of economic activity. And that's for a couple of reasons. One, as interest rates come down, that lowers financing costs. But also, typically speaking, when interest rates come down, we see home prices go up as well. And so both those things help make new builds a bit more viable for developers. So we would expect to see, all else equal, and that can be a big caveat at times, we would expect to see more new building as interest rates come down.
OK, so Angus, that being the case, the question is still that target of 1.2 million homes that the government wants. Now, the government can't develop those homes. State governments don't develop those homes. It's the private sector that develops those homes. The question is whether there is enough incentive out there to start building those homes, because in the past, the price of labour was too high, the price of land has been too high, and to then try and get the buyer approval and make a profit has just been a hurdle. It's been too great for many developers.
Yeah, you're exactly right. It's been a very challenging market in the new homes market for going on 3 or 4 years now, really since COVID. And not only the factors you point out there, also just construction costs have gone up enormously over the past few years. During the pandemic, we saw the costs of constructing detached houses and higher density as well absolutely surge. Now, the good news is we're not seeing that rapid pace of cost growth now. That's kind of petered out. But we also haven't seen costs come back down. They're still at that elevated level. So it is just a lot more expensive to build homes than it used to be.
OK, so the building of the homes is one thing. The running of the homes is another. If you're a buyer of a new home these days, quite clearly you might be attracted by a more energy efficient home because of the price of energy. That becomes a key one. So the notion of solar cells on your roof and batteries become a real attractive selling point for many homes, I would have thought. You've done some work on that.
Yeah, my colleague Eleanor Cray had a report out this week in partnership with Origin Energy looking at energy efficiency in homes. And one of the clear messages that comes through is buyers care a lot and homeowners care a lot about energy efficiency. And the couple of reasons for that are probably not a huge surprise to people. One, just the cost of energy and trying to bring that down. Hardly a surprise given how strained household budgets are at the moment. But also environmental concerns come through pretty clearly as a real reason why people are interested in doing this. One of the interesting things in the report is that a lot of people care a lot about energy efficiency, but maybe don't necessarily know where to start with their home and how to improve the energy efficiency. And things like the home energy rating scheme are not necessarily that well understood. So there's maybe a bit of an education gap in how we can make our homes more energy efficient.
But there's a second part about this, and that is that you're right. Is this only for new builds, or is this also for existing homes? Because a lot of homes have not had the solar panels put on them, have not had the batteries put inside them. And of course, if you are considering selling a home, you're not likely to put those things in because, of course, you're not going to get the payback if you do.
Yeah, exactly right. Existing homeowners are interested in these features as well, though they're going to tend to be less common than in new builds. New builds are obviously held to much higher standards when it comes to energy efficiency than existing homes. Homes built back around the turn of Federation weren't even considering the idea of solar panels. But even simple things like insulation, double glazing, those sorts of things are going to be less common in those older homes. One of the things that comes through in the research and in the report is that people do plan to spend a lot to improve the energy efficiency of their home. And if that were rolled out across the country, it would represent a very significant investment in these energy efficiencies. But that cost of doing so for the homeowner is a big hurdle for people investing in these features.
Yeah, it's interesting, and yet it's also too big a hurdle for most of the governments these days that have taken a lot of the rebates away for many of those things. Just come back to interest rates this week. The Reserve Bank, quite clearly, the markets, economists say it's just put down your glasses, there will be a rate cut. But given the fact that the economy is strong, the consumer demand seems to be picking up, the economy seems to be actually starting to build a little bit of momentum, that wages, say, for example, are still going forward, that unemployment is low. All these things have come out in the past couple of weeks. Does that, again, really raise the spectre that we're in a position right now where interest rates actually need to be cut?
Yeah, I think the reason we're expecting, or maybe expecting is even too soft, a kind of nearly guaranteed a cut this month, is the fact that inflation's back under control. For some definition of under control, underlying inflation is within the target band. It's on the high side. The RBA would certainly like to see it lower, but it's nowhere near as much of a problem as it has been for the past few years. And so that's enabling the RBA to start to take the pressure off. But as you say, on a lot of other fronts, the economy is still pretty strong and pretty hot. We are starting to see consumer spending pick up a bit. Wages growth was actually a bit stronger than expected. Unemployment remains really low. And so all those things, the RBA is still going to be pretty cautious about how quickly they cut from here. So while we're pretty confident we're going to get one cut, we're maybe not as confident that that second cut is coming as quickly as perhaps we all hope, and very unlikely to come in the double 50 basis point cut at this meeting as was perhaps hoped for or expected a few weeks ago.
And yet the curiosity of all of this is that you have not had the so-called wages price spiral. The Treasurer pointed that out this week, and that is a good thing for Australia because that was the worst scenario that could have played out. But it seems even though unemployment has stayed low and wages are now above inflation, that hasn't translated into more people losing jobs.
Yeah, exactly right. Certainly one of the things the RBA was concerned about and, why we saw such rapid interest rate hikes was low unemployment feeding through to strong wage growth, feeding through to entrenched, sustained high inflation. The good news is that that cycle kind of didn't happen, and we're in a position where inflation's coming back under control. We can start to cut interest rates. Part of the story there is the fact that the structure of the Australian economy, how monetary policy works, is very different from 30, 40 years ago when those wage price spirals were a lot more common. People expect inflation to be around 2.5% because it has been for 3 decades now, and so we don't get that entrenched change in expectations feeding through into wages, feeding through into inflation. So in many ways that's a good thing and reflects the success of the RBA over the past 3 decades.
I'll tell you what, Angus, always good to have in the program. Angus Moore from REA Group. I appreciate your time.